Hello everybody, welcome to another video here on the channel. Today I'm going to be going over a little bit more of an in-depth look at the charts. I'm going to be going over some concepts that I've recently studied. I have annotated on the 1 minute chart a lot of example of concepts and price and correlation with time, especially with the macros. I'll be explaining macros, SMTs, SMT-TPs, discount, protected highs and lows, a little bit of standard deviation. So yeah, this is the week of Monday the 6th of May through Friday. So this is going to be sort of like a little replay session. You kind of predict what's going to happen though because of all the annotations. But yeah, I'm going to try to explain all of these the best I can so you guys can get a little bit of an understanding of the charts. So, first of all, as you can see right now, we are at 4:30 a.m. Usually I wouldn't start looking at the charts until like around 7:30, maybe like 6:30 to 7:30. Just depends on the day. So, going into this, I can sort of play a little bit of action here. All right. So, with my indicators, a couple things I got. Number one, I'm going to see if this works. Yeah, so I have this one indicator, which is Fair Value Gap by Nephew Sam. This sort of shows you fair value gaps that are created on a on every time frame from. Let me show you here. This is every time frame on the 1 minute, 5 minute, 15 minute, hourly. And it shows you the fair value gaps for those, which is right here, right? So this right here is a 15 minute. This is a 5 minute. These are 1 minutes. So yeah. And by the way, if you guys are confused with any of these concepts that I'm going to show you, you can refer to my course that I have in my Discord community, and that will be in the description down below and on the screen right now. So feel free to check that out. There is a free subscription that you can get. It's like a 3-month subscription for free. So yeah, if you guys are interested in that to get some free education and possibly want to join the community, I will do live trading with that starting in just like a couple weeks, which most likely by the time you see this, I've already started it. But yeah, there's going to be a lot to come in the Discord community. It's going to be very cheap compared to a lot of other communities. So that was my little promotion. Let's get into this video. So what I'm going to do here is I have NQ and I have ES. So this is NASDAQ 100 and S&P 500. And I'm going to go back and make these correlate, right? So I'm going to put both the charts next to each other. I'm not going to do this the whole time so you guys can sort of see NQ a little better. But basically, let me just show you an example here. So for any of you guys that are confused, I want to show you an example of an SMT. So let's let this play out real quick. Okay, so anytime I have SMT on the chart, which if you don't know what an SMT is, it's called a smart money technique. It's basically a little indicator. It's not really an indicator, but it's sort of a concept that will show you a reversal in price or a possible retracement back to discount. So, for example, right here, with these correlated, you can see that S&P created a higher high right here, but NQ created a lower high, and then they sold off. So this should indicate right here, after you see this right here, this is an SMT because it is a divergence, and this is to indicate a reversal or a retracement. Okay, so now that we got that out of the way, I'm going to minimize this chart so you can just see NQ. All right, so going into here, first thing we can see, we have an SMT, and we can look at a couple other concepts. So in addition, we also have this imbalance. This is called a liquidity gap, and it's basically where there's nothing right here. So if you look at this candlestick, there's a gap in the candlesticks that can basically be used as some sort of support or resistance. So you can see price came up, wicked this, and then right here, we didn't even close above this, but you can clearly see that we came up, rejected this liquidity gap, and then we sold back off. And a little sort of quote by ICT is that he says, wicks do the damage right here. This is the wick, it does the damage. If you were to put a position here and put your stop like right here, you'd get stopped out, but price is still technically respecting this gap. So wicks do the damage, but candles, which is the bodies right here, the candles do the narrative. So as you can see, if you just looked at the candle bodies, they did respect this gap, but the wick obviously came all the way up here. So first of all, looking at this, we had traded up into up here, and a couple things to look at. If we go to the 15-minute, you can see that we have liquidity up here. So this is where the draw of liquidity is. We have also some liquidity down here, and right now we are in an uptrend. And this little line right here is marking the is just marking midnight. This is just where this all starts. So first thing I want to point out is that after an SMT is created and then we sell off respecting the SMT, we'll put a protected high. So, or we'll put any sort of protected thing. So this little purple line that says protect or protected, this is a protected high, meaning that after this SMT is created, we should not retrace back up into here. So price will not go back up to here until some sort of liquidity down here is taken. And you can see right here, we have this high created and we have this high created. You want to look at the swing low, right? So here is the bottom of the swing low. This is your SMT TP. So this is kind of showing you where the draw of liquidity is going to be after the SMT is created. You can also pair with this with a couple other things. You can look at other liquidities. For example, the bottom of this is the top of this 1 hour fair value gap. So that just adds more to this draw of liquidity. You can also see if we drawed out discount of this fractal right here, which is just this leg moving up, you can see that discount is right around this. So this is a great draw of liquidity. Honestly, what you could do, after you see that this wick respects, or after this candle respects this imbalance, and we then have this first candle, if you wanted to be risky, you could honestly put a position here and anticipate a sell-off, or right here you could hope to see a retrace to this 1 minute for value gap, take an entry off here, and then go lower. I'm not going to go too much into entries. I mean, I will a little bit, but I just want to show you how price moves with these concepts. So first of all, SMT right here. Our first take profit, it could be anything you really want. It could be discounted this range right here, which would be somewhere around right here. But mine would be at the bottom, or at this SMT TP. So right here, SMT created. What's next? We want to draw down. We want to go straight down to this SMT TP, which is exactly what happens here. So now we're in discount. We also have this 1 hour for value gap. So let's see what price will do now. It's going to sort of consolidate here. And now we enter a macro. So this macro is going to be this little gray box right here. And basically what macros are, and this is something very important to remember, macro is a certain time of the day, and there's many macros throughout the day. You can see with these gray boxes, there's multiple. Macro is basically indicate a reversal. So if you are seeing a certain trend, for example, a downtrend right here, you could expect the macro to reverse it and then go back up. And then you would take the previous high, which would be up here, and that would be your draw of liquidity. I'll get into that a little bit later. But first of all, this is the 750 to 810 AM macro. And going into here, if you are to enter a macro, you want to see price basically do a market structure shift, which is whenever we go above a recent high and then we retrace down to then go higher. That can also be paired with SMTs, but again, I'll explain that in a little bit. So in this macro, you can see we have a downtrend, and then right when we hit it, we start to go up. So then right here, you want to see price go above this high. You want to see a market structure shift and see price go above this high right here, because obviously this could just be a simple retracement to go lower. So right here, this was just a retracement. We come back up, retrace a little bit more. And then right here, we go above this recent high. This is the most recent high. We trade above it. Right here, you'd be looking to take an entry in this fair value gap. So if I was to draw this out, you could put, where's entry? You could put entry here. You'd put your stop at the bottom of this candle. And your target would be these relative equal highs. So where's this at? TP. And you can see right here we take it. So right here is a great example of macro doing a reverse. We have a downtrend. Who is making money at this moment? It is sellers. Macro happens. What do? We reverse the move to go higher, and we take out this liquidity. This is your entry. We do a market structure shift right here. I'll mark this out. Market structure shift. As you can see, we close above here. For market structure shift, you want to see the body of this candle close above this high. And as you can see, we retrace back down, tap into this fair value gap right here, and then we go higher to take out this TP. So right there is already an example of a trade happening. Secondly, you can see that we have a strong manipulation candle. So price, right here, we had a big red candle that came down and took out this low right here, and also this low, so these equal lows. This right here is a big manipulation down just to then go higher. So you would want to draw a standard deviation on here, and you'd see we have this 2.5 area, which lines up with this buy side liquidity, and this 3.5 to 4 area, which is just a standard deviation projection. This is probably where price may go to, but a couple things to note about standard deviation is that when we enter the 2 to 2.5 area, which I'm going to mark out right here, there's two things that you could see possibly happen. One, you may see a reversal. So after we hit this, we may just reverse down. It could indicate a reversal of the move to go lower. Or we may see a retracement down to either discount or to this 1 to 1.5 area, and then go higher up to this 3.5 to 4 area. And usually the 3.5 to 4 area will be a reversal, so then you'll see price go lower. And you do want to make sure that you are doing standard deviation on the correct manipulation, because if you do it on the correct manipulation, the standard deviation will be more accurate. Okay, so we took out this liquidity. Let's see what happens now. So we come back up and we enter this macro. Now, this macro, I wouldn't want to see us reverse unless we went below this low right here. So this could just honestly be a continuation macro. As you can see, we are in 2.5. We come back down, and we'll see if we end up going to the 1 to 1.5 area. So now either we'll just keep continuing lower, or we're going to tap discount of this range. So here is discount marked. Usually I do like to look for discount because you're a little bit more in a discount, which it helps for buying. So you'll be able to buy at a lower price or at more of a discounted price, so then you can get an even higher move up, right? So let's see what happens here. So right here, after we tapped 1 to 1.5, we created an SMT right here. And because of that, we do now have a protected high. And something I forgot to mention is that anytime an SMT TP is hit, the protected high or low that is formed from the previous SMT will most likely be a target of liquidity. They're always going to want to soon in the future be targeted. So right here we have this protected high this is going to be a liquidity target after this SMT TP gets taken. So as you can see, after this SMT is here, we sell off and we take out this SMT TP. So this right here is just a great example of you seeing this SMT, and then the next right after this SMT is formed, we come down and take out this SMT TP. Additionally, I want to see discount get taken. So I want to see us go to this 50% level. We're very, very close. Now, sometimes it won't happen. It doesn't have to happen, right? But I'd be looking for any sort of long position if we did enter into here. So here we are right here. Let's just see what happens. We have another macro. This is 920 to 930. At 930, market does open. So let's see what happens here. So you can see here's market open. So again, after we took out this SMT TP, the next draw of liquidity is this protected high. You can see we sort of consolidate a little bit here, but we do end up taking the protected high. And then right after we take the protected high and we tap into 3.5 to 4, what do we right away do? We sell off. Instantly sell off. After we sell off here, we tap into this 1 minute and 5 minute fair value gap, and we create an SMT at these lows. So after that happens, we have this SMT TP right above here. And right after this SMT is formed, that gets taken, right? So after that gets taken, generating more structure right here. And now we're at 9:50 to 10 a.m. macro. So right here, I'm wanting to see, is there going to be some sort of market structure shift to the downside to indicate a reversal? Because you can see we're in an uptrend right now. So we do tap in this 1 minute, have rejection off. So most likely we're going to go higher. But right here, as you can see, here's a market structure shift. So this can be a little tricky because technically we're still respecting this 1 minute. But there is no PD raise. There's no, after this low is taken, we want to try to find a PD array that will send us lower. PD array is basically like a fair value gap, order block, right? Some sort of point of interest. So right here, there's nothing. So I'd not look to take a trade. As you can see, we kept going higher. And as you can see, this macro, sort of just a continuation, sort of a little bit choppy here, especially because market open just happened. But right here, and this indicator is nice because you can see every fair value gap that's created. So we have a massive sell-off fair value gap right here. We're probably going to head a little bit lower. So we create a low right here. We take out this low. And then right here, we form an SMT at the highs. So that would make this high right here, because this is the top of the SMT, this would make this a protected high. After this SMT, we sell off. Here would be your SMT TP. We enter the macro right here. So here's a couple things to note. After this SMT, we want to find some sort of entry. We can find an entry with this SMT to head down to this liquidity. So right here, with this macro, price ends up coming up to this fair value gap. So you can take an entry right here at this fair value gap to then head lower. You could also wait to see a confirmation with this macro. As you can see, we're in an uptrend. This one's a little more confusing because we're in a we go down and then we come up here. So a couple things to look at right here in this internal model. We have this SMT, so we can take an entry in this fair value gap, right? And this fair value gap is also in a premium of this range. After you take this entry and put your stop above the fair value gap, or above the candle, or at the candle of the fair value gap. You could also put it at this high, whatever you're comfortable with risking. We have another SMT that's created right here. So let's say you put your entry right here. You're in a little bit of drawdown, but you have another SMT right here. So right now, you want to see an instant sell-off. So a candle here, and then there we go. There's our sell-off. So now I'd want to see, for me to add in more contracts, add more to my position, or a confirmation that this will go well, is that I want to see us retrace into this fair value gap and respect it. So right here, we retrace into the fair value gap. Here's an entry you can take. And right now, I want to see us sell off down to these lows, this low, and ultimately down to this low. And if we look at discount of this entire leg, I want to see us retrace down to discount. So let's see what happens here. We sell off and we go all the way down to this TP. Now, you can see right after we take this TP, have an instant reversal back up, and we also have tapped into discount. So tap the 50% area, and then we come back up. Another thing you could probably draw in is this leg right here is manipulation. I don't know if this would really be a good leg to draw in. Possibly. We did respect this to 2.5 area and come back up as a reversal, so maybe. But personally, I really wouldn't care about that. So now we come back up. This was basically the macro. As you can see, we were in an uptrend. The macro reversed us. Previous low that we took out was this previous low. We took it out, retraced back up to then sell off. Now we wait for more structure. And whenever I say waiting for more structure, you basically just want to wait to see some sort of setup appear again, to see more concepts appear. So a couple things to note here. We have an SMT right here. So this is showing us that we want to head lower, but we also have an SMT among these lows. Now, whenever I draw it like this and directly not on the candles, means that, for example, NQ was showing an uptrend right here, but ES was probably showing a downtrend. And I could probably actually show that over here. Yeah, so right here, if you look at the bottom of these candles, we're creating lower lows, right? But ES is going, but NQ is going higher. So a little small SMT. Now, this would be a protected high, but it also is an SMT TP for this SMT. And then you'd have another SMT TP down for this right here. So I would not really take a trade in here because there's double SMT. So I would just wait it out. But here's something really strong. We create equal highs right here. So this is a very, very high draw of liquidity. I don't expect this SMT to play out. You can also see we did respect discount, or we respected the 50% level twice of this range. I do expect us to come up and take this high right now, which is exactly what we do. Okay. So in addition to this, and I can take this off. In addition to this right here, we have another draw liquidity, which is this high, and we also have the protected high of this previous SMT. So see what price does here. We come back down, retrace into this fair value gap, and then we come up and we take out this protected high. So next after that, we create another SMT up at these highs. And something that's really, really nice, and this is going to probably be a really good example, is that we have a macro coming up. Now, as you can see, we're in a strong uptrend. So what is the macro probably going to do? It's probably going to reverse price and then put us in a downtrend. So in addition to that, we just took out buy-side liquidity. We just formed an SMT. This is going to be very, very good for a bearish move. So macro comes in, see what happens here. We sell off. Now you can already see an entry right here if you were to be more risky. We sell off, we create this low right here, and then we come back up, and then we take out this low. We didn't close above this low yet, but we also do have this order block right here. But let's just wait a little bit longer. So right now we haven't done anything yet. I want to see a body close below this low. So right here, this is great. You have a very good sell-off right here. So now I want to see some sort of retrace. This accumulation right here could be a good retracement to take an entry off of, but we'll just keep watching. So now we have this fair value gap. This fair value gap, I would take an entry if we did retrace back up to it. As you can see, we did not retrace back up to it, but you can also see right here, from this macro, we obviously sold off. So let's see what price is going to do a little bit more now here. You can see we just sold off all the way down. So right here, great example. This macro right here, reverse the move. And the whole move doesn't have to happen in the macro. It can just start the move. So this started the move down. We did not get a retrace to this 1 minute, which would just be unfortunate. But we did sell all the way back off to the sell side liquidity. In addition to that, you can see we have this 1 minute, this massive 1 minute. So we may actually respect this to then go higher. And we also did just take sell side liquidity. So most likely we'll go higher here. You can see clearly going higher here. Here's a little 1 minute for value gap. If you feel like it, you could take an entry in here. See, we buy back up. And remember that this protected high is a target because it was at the top of an SMT. This protected high is the target. So right here, we almost come to this protected high, but we do sell back off to discount, which would be really nice for long setups. We also do have a fair value gap right here that we tapped into. So I'd want to see some sort of retrace to a PD array. We end up coming back up here, and we did take out this protected high. So right here, beautiful example. We come up here, don't take it yet, just to come back down into discount to grab more longs. We just grabbed a bunch of longs here and right here, and then we bought all the way up to take out this protected high. So now we end up coming down and we sell off, and hold on, almost. So we come down here, we actually do a little retrace, tap premium, tap this 50% area. We come down, we take, we form a little SMT. This is also sort of a liquidity sweep. We have liquidity right here and right here. We come down, we sweep it, and then we close back up here. Here's an SMT. In addition, we have this macro. So we were just in a sell model. This macro can indicate a reversal. This is really nice to see for a reversal because we're in discount of this entire move. We have a liquidity sweep with an SMT. So now I want to see us come back up to take out this high. So right here, we take out a recent high, market structure shift above it. I'd want to see some sort of little retrace. We don't have any fair value gaps though. Really not much here, but you can see again, the macro did reverse price. We had a downtrend, we tap into the macro, and you can see right here, we obviously do the opposite of what this previous move was. Then we come back up and we do take out this SMT TP formed by this SMT. Watching price a little bit more here. We're sort of consolidating. This is from 2 p.m. to 2:20. We do a little liquidity sweep right here, and we form another SMT, also tapping into this 1 minute for value gap. So here's SMT TP, here to be your target. We end up taking that out. As you can see right here, here's another example of a manipulation leg. It's a strong red candle down that manipulates price, sweeping it, and in this case, forming an SMT. So this would be a good manipulation leg to draw out. Here would be your targets. And if we look at this 15 minute, you can also see that we have a previous massive liquidity gap. This is probably on a higher time frame. So this liquidity gap is a good target of liquidity. So you can also see price has been trying to trend back up to tap into this liquidity gap. So I'd want to see, I don't want to see what happens here. So standard deviation, I'm predicting that this 2.5 will be met. So you can see right here it's met. We come back down. We're into this 1 to 1.5. I would want to see a retrace back into discount of this move though. So we are in discount now. So we wait for some sort of buy model. So here we're just generating more structure. We end up coming up, but we don't take this SMT TP yet, just to come back down of this fractal, generate some more longs right here. Right, we're still consolidating in here. Then we do end up taking out this low and forming an SMT. In addition to that, we're now in this macro. So right now, after all of these things aligned up, and now that we're in a macro, this is where I want to see price then come back up. This is where I want to take a good long setup. Because instead of just taking a long setup like somewhere right here, where we just tap this fair value gap and we're in discount, there's really not much. It's just this fair value gap and discount to then go higher to this high. You can take this setup, but when you're taking this setup, you're basically just looking to make money, right? You're not adding a bunch of confluences together. This setup right here, or this setup right here where we have a liquidity sweep, we have SMT, we have macro. You can also see we have a manipulation leg that comes down to sweep liquidity. We have this 1 minute fair value gap right here that's been retested multiple times. This is a lot more higher probability to take longs than just this spot right here where we just simply have a fair value gap and we're in discount, right? So that's why it is extremely important when you're taking a trade to actually wait for the setup to occur. You want to wait until you have a really good setup. That's why some people, when they're really disciplined with trading, they're only going to take like 1 to 3 trades a day, because you're only going to see this. You're not going to see this very often, and that's why I'm trying to get this video out, is so that people can kind of realize this and sort of see how, if you have, especially with macros, if you have time and price and all these concepts adding together, then you could have a lot better probable trades. This is the exact thing that's going to take you out of your losing streak. This is going to take you out of your break-even stage. This is what's going to make you become a lot more profitable as a trader, is actually staying disciplined and waiting for the correct setup, because there's plenty of setups throughout the day. I'm showing you multiple examples of really, really good setups. All of this action right here is just one single day, and I'm going to be showing you guys an entire week. So there's obviously a lot of really good setups. You just have to stay patient and wait for them. So going into this, we have all these. We have this 1 minute. I want to see what happens to this macro here. You could see, great example right here. We have a high taken. We come up, displace above this high. I want to see a retrace into this 1 minute. We also do have equal highs right here. So right here, we retrace into 1 minute. We respect it. We did end up selling off here a little bit more, so we're not ready for longs yet, but we did also just tap into this 1 minute again. So let's see what happens. So right here, we tapped into this 1 minute, we came back up, and of this little mini fractal right here, you can see we did tap discount, and we did end up going higher. We took out this buy side. did a little more structure right here. Have not taken out this SMT TP yet, and we have not tapped in the 2.5 yet. So generating more structure. We form an SMT right here, and right after this SMT is formed, then we explode upwards. So a little thing to notice right here. How come this did not play out? So we have we had a downtrend, we had displacement above a recent high. We came down and we tapped in this 1 minute. Why would I be a little cautious of taking this 1 minute? It seems perfect, right? This is a great setup. We have equal highs, came down. Well, this is where trading becomes really tricky. This is a thing that many people, including myself, have a problem with. You tap into here, you see this, and you can also see, we wick down. This is where trading is just tricky. There's really no solution. There's nothing I can say that will make this problem get fixed. It's just simply how price is. So yes, we should have went into this fair value gap, or we should have respected off this fair value gap, but we don't have to, right? It's not 100% that we're going to. So if I was to take this fair value gap properly, I'd want to see some sort of reaction off of it. You could see we just have one candle right here. We opened here, closed up here. All right, we wicked this. You could take an entry off here, and honestly, I probably would. I probably would get stopped out, but we just wanted to come back down here a little more. And also, since this is a big wick, you could draw out consequent encroachment. Now, realistically, if I was to take this trade, I probably would take it here, right? I'd probably take it at this candle close, and I'd get stopped out because I'd put my stop at the low of this candle. Now, that is where we can have a re-entry. So that happens all the time. A lot of traders take re-entries, right? You have a good model, it doesn't play out because it's not ready yet. So now we come back down to here, we sweep this low, we respect consequent encroachment of this. After we had this candle go up, I could take an entry, or we have this candle, we can clearly see this is a respect. If we then retrace back down to discount of this little leg, which is right here, I may want to take a trade off of just discount, or maybe even a 30 if there's a 30-second fair value gap in here, right? Then it'd be ready. But sometimes when you're seeing a model, you'll have to take multiple entries because sometimes there will be a picture perfect model, but you will still get stopped out because we're not ready enough. But you can see right here, we had a downtrend. We ended up reversing the move in this macro, and we have these standard deviation targets. So I don't really remember if this gets hit, but this one right here, this previous one does get hit. 3.5, we tap it. After that, I would look for some sort of reversal. We don't necessarily have to tap into this one just because this one was tapped into. But you can see we do end up tapping into this. So it is near the end of the day. The market does close at 4. So here is the end move of the day. We make a high here. So yeah, this is this entire day right here, completely reviewed. And one more thing to also recognize is that for a daily candle, I'm going to go to the daily right here. This is really messy. I'm just going to go back to the 1 minute. So something to notice is that anytime it's 6 p.m. So right here, look at the time at the bottom. This is Sunday at 6 p.m. This is going to create a new candle, a new daily candle. This is your daily opening price. And whenever you're learning time and price, it's very important to take into account the daily opening price. So this candle's daily opening price. And if you were to create a bearish or a bullish bias for the day, you want to see a move in the opposite direction to start off the day. So for example, all of this is after market, right? During all of this, the market's not even open. You can still trade it with futures, but the actual stock is kind of closed down. or it's not New York session. So all of this right here, if I look at this, okay, you can see this is Asia session, this is London session, right? Asia and London session are during the middle of the night for me. Well, 8 p.m. to 12 a.m. This is Asia session, right? So if you're if you can only trade in the nighttime, trade Asia, because Asia does have good setups, right? There's not as much volume, but it does have good setups. London, if you can only trade from 2 a.m. to 5 a.m., somewhere around there, then trade London. These are both two separate things. Just like how we have New York AM and New York PM, there's Asia and London. It's just that New York is the biggest. It's personally what I trade because I live in the United States, so I have closer to that time zone. But again, right here, when you're looking at a daily candle, and let me sort of just draw this out so this makes sense. So let's say right here, this is your daily open. Let's say right here is your daily open. It starts right here. What you're most likely going to want to see, if you're going to see bullish structure or a bullish move for the New York session, you would want to see some sort of bearish structure for the middle of the night session for like London and Asia. So let's say right here, this is let's say this is Asia session. So this is 6 p.m. The day starts right here. Well, the daily candle starts here, not the actual day, but the daily candle starts here. If Asia and London session are in a downtrend, if they're trading below the daily open, you most likely will see New York have a run way above, not way above, but above the daily open. So if you're looking to see, let me also draw this out right here. So if you see that overnight prices traded below the daily open, that should give you a bullish bias for the New York session. Because what will happen is price will usually start off lower. If we're to be bullish for the day, price will usually start off lower and will usually be trading below the daily open, but then it will finish off above the daily open. So this should give your bias. So for example, right here, if I show you this on the chart, this green line is the daily open. Right here, you can see we are trading below the daily open. We create the low of the day right here. Price trades below the daily open. So now whenever it is, let's say 7:30, whenever you get on the charts and look here, you can anticipate for price to be bullish for the rest of the day because we started off below the daily open. And same thing goes for if we're bearish. If we are to be bearish, we'd see price trade above the daily open during the middle of the night, and then you'd see us start to go back downwards and have a bearish bias for the New York session. So all of this right here is the New York session. All of this right here is London and Asia session. So you can clearly see how this is a great example of time and price, right? The time of day right here affects price right here, and the time of day right here affects price right here. And then same thing with macros, right? The time of the macros, for example, this right here, we have a downtrend. Here's price, and then right here is time. So right along here is time. The time window right here will affect price. And you can see we end up having a buy model right here. So this is the first day. This video it's around, I've been recording for about 45 minutes. So I am going to wrap this up here. First, let me just bring this over here. So let's show another example. Let's show another example of time price. So right here's the daily. This is the daily open. So we want to see what is being traded right here. So as you can see, we're kind of just going around the daily open, but majority of this, we're trading below it. So this is still like, this is 8 p.m., right, 9 p.m. This is during Asia session, which I can do this as well. So here's Asia session, right? We're trading below the daily price. Now here's where London session is around, and we're still trading below daily price. But we want to see where we are. You know, we do want to see where we are at market open. So right here we're above daily. So right here we're sort of right around the daily open, but right here you can see we're clearly selling off. Majority of the day we're below this daily open. Now we're at 520. This is around where the day is starting. So since we have been below this daily open for a while, I would anticipate us to have a bullish sort of day. And you can see also right here, I did annotate a little more structure. I am going to go over this probably later today or in another video. But yeah, so this is really all I have for Monday of this week. Not this week that it's right now, but of this specific example. But again, guys, to take out of this, you can see how all these concepts right here, how they all do affect price in a certain way, how you can find entries, how you can find draws of liquidity. All of this, I guess you could say this is all starting to make sense, right? If you have been learning these concepts, but you've been kind of confused how to put them together and how to be patient with your setups, this should all start to make sense. And this is where you're going to start becoming profitable if you really study these on your own. What I do recommend, you know, if you don't really know your edge much, if you don't really know what to look for in price, I would get this indicator right here, ICT Macros by Cognito. I would get Fair Value Gap by Nephew Sam. And then you can get, this is my favorite. This is daily, weekly, monthly, yearly opening. It's just called DY or DWMYO. I guess so. So those are some indicators. That's really all I use. It just kind of helps a little bit. But yeah, I like to use SMTs, protected highs and lows, SMT TPs. I draw a discount. You know, I mark out liquidity sweeps. Obviously, the fair value gaps. You can do order blocks as well if you find some of those. You can also do standard deviation. And that's really all you need. I mean, also liquidity voids. Liquidity voids are a great target of liquidity. But yeah, and obviously buy side liquidity and sell side liquidity you can mark out too. And another thing I would recommend this if you are confused. I do recommend trying out my course. It is completely free. There's a 3-month free subscription. I think that is a great deal. You can sort of get into my community, maybe meet a couple people, learn a little bit more about me, sort of just get a lot of information, right? Whenever you are starting to trade, you want to try to get as much information as you possibly can. But in addition to that, you also want to study as much as you can. You don't want to just binge watch my course and think you're going to learn everything. You want to find examples. Like for every single lesson in my course, you want to find examples and actually find it in your own trading, because that is the best way to grow and best way to learn. So that's really all I have for this video. I will make more videos of further going in depth for each and every single day of this specific week. But yeah, that's all I have, and I'll see you guys in the next one.